Monica, thank you, and hello to everyone. On behalf of IFAC, as the global voice of the accountancy profession and as a network partner of the Integrity and Compliance Task Force, I want to take a moment to say thank you to the B20 and III for all of their efforts to present this webinar today, and I'm honored to try to wrap things up with a few closing remarks. For those of you who are participating today that are professional accountants, either working inside of businesses or in public practice, we at IFAC believe that there has never been a more exciting time to be a professional accountant. Next slide, please. Over the past 2 years, I hope you all know by now that IFAC has actively supported the establishment of the ISSB. It is the best path forward to a rational, harmonized global system for reporting on sustainability in ESG matters. This is critical for the business community, the global investor community, as well as broader society. As you've heard in detail today, under the leadership and governance of the IFRS Foundation, the ISSB is a reality, and it is now time to turn our attention to transforming high-quality standard setting, which will hopefully be completed on the first 2 EDs by the end of this year, into high-quality enhanced corporate reporting. And for this to happen, it's important to realize that sustainability starts within companies. Next slide, please. As sustainability report-related information takes its rightful place alongside traditional financial reporting, it has become more apparent than ever that sustainable value creation is the right approach for business and for society. Integrating sustainability risks and opportunities on environmental, social, and governance issues into the way companies think, in the boardroom, amongst senior management, in the way strategies, business models, and decisions are made, and in the way both risks and opportunities are assessed, all of this is the clear path for corporate success. Adopting an integrated mindset, as we define it, is the starting point for sustainable value creation, and it's the reason we recently published important thought leadership on championing an integrated mindset, explaining what it means, why it is important, and how it's achieved. This thought leadership focuses on the critical role of companies in accelerating sustainability. So I encourage you to review this one-page publication here in more detail, but allow me to highlight just a couple of points. First, information silos within companies, between chief financial officers and corporate sustainability officers, for example, are barriers to value creation and sustainability. We all need high-quality information for investors as well as for good decision-making inside of companies. We need information that effectively connects financial measures and performance with sustainability-related impacts. CFOs, along with finance and accounting professionals, are critical to bridging this gap. Breaking down silos is also key to enhancing the way that companies communicate with investors and other stakeholders. The goal is to improve what companies report, not as a compliance exercise, but so that financial capital is allocated to sustainable value creation. Finally, we must have trust and confidence in sustainability information. If ESG factors are going to influence capital allocation, which is clearly the case, it must be on par or of equal quality with financial information. Again, this is the expertise of finance and accounting professionals working within the office of the CFO. As we turn our attention, jurisdiction by jurisdiction, to the adoption and implementation of future ISSB disclosure requirements, this integrated mindset approach can drive company reporting, again, not as a compliance exercise, but as a reporting transformation that helps deliver sustainable businesses. Next slide, please. So if the goal of the ISSB is to develop this global baseline of disclosures for investors and global capital markets, it's important to take stock of what companies are currently reporting. IFAC, in partner with AICPA, CIMA, has examined ESG reporting by 1,400 companies from the G20 nations plus Singapore and Hong Kong. Last year, when we looked at 2019 reporting data, we found that nearly 70% of ESG reporting used multiple frameworks or standards. And that statistic has increased to 80% when we look at 2020 fiscal year reporting. Most of this information is focused on information that addresses societal impacts on company activities. For example, in 2020, 76% of what companies reported referenced the sustainable development goals, and 72% of reporting used GRI standards. The level of reporting from companies in jurisdictions in Asia Pacific, this includes Indonesia, Singapore, Australia, and South Korea, is at or above these global averages. But in contrast, reporting by companies in the Asia Pacific region linked to SASB standards or referencing the TCFD framework tends to be a little bit below these global averages, except for in South Korea. So there's already a lot of societal focused reporting across Asia Pacific, but there is not much investor focused disclosure. But as we've heard today from Ilko at GRI and Sue and others, the new memorandum of understanding between GRI and the ISSB demonstrates that there is a role for both of these types of disclosures, and they can in fact be complementary, not competing. We've talked about the two-pillar or the building block approach today in a couple of the presentations. I just want to emphasize how important this is. Multi-stakeholder reporting seems to be doing pretty well in the Asia Pacific region. We need companies to increase their focus on the investor-focused work of the ISSB building block 1. To drive sustainable value creation and to meet the information demand of investors, companies really need to embrace this two-pillar or building block approach. Next slide, please. Earlier this year, IFAC published a call to action for the accountancy profession, suggesting important steps that we should take. Whether we work in public practice, within companies, or in the public sector, our actions as professional accountants and as PAOs can accelerate sustainability and prevent costly regulatory fragmentation. As a profession, we must acknowledge our role and our public interest responsibility as enablers of the sustainability movement. Because the world needs high-quality sustainability information, we think we need to do the following. First, we need to support this idea of an investor-focused, comprehensive global baseline. Second, we must advocate at home and with local policymakers and regulators for ISSB adoption and implementation. This is why we think the B20 initiative is so important. On this point, IFAC issued guidance last September on a process for turning global ISSB disclosure standards into local reporting requirements. And we encourage all G20 nations to begin the process of devising the legal and regulatory mechanisms that can be used to implement the new ISSB EDs once they're finalized. In the meantime, companies who report voluntarily should look to the ISSB for direction. While the work of the new board will take time, companies who want to enhance their current ESG reporting can follow SASB standards and the TCFD framework, for example, both of which will be incorporated into the future standard setting of the ISSB. As Sue explained, the industry-specific nature of SASB standards acknowledges that ESG factors do not affect all companies in the same way. So an industry approach should make it easier for companies to develop disclosures that are relevant to their specific facts and circumstances. So in this way, companies who work to enhance their sustainability disclosures today can be well aligned with future ISSB standards. And finally, where we can, we must contribute to the ISSB's technical standard setting process. This includes CFOs and accounting and finance professionals within companies. The standard setting process, done well, like it will be at the ISSB, is out of necessity detail-oriented. And the ISSB's 2 current exposure drafts are no exception. IFAC encourages business community to take the time to submit comment letters on these important exposure drafts. If your organization has in-house climate and ESG technical expertise, please contribute this knowledge to the consultation process. If you do not have technical expertise, your views are still important, even if they are more thematic in nature. IFAC's response to the ISSB, our response to the US SEC, And our response to the work of the European Commission will take this approach, and we urge your organizations to do the same. The ISSB needs a show of support for its investor focus, the global baseline, to build on existing work like that of SASB standards in the TCFD framework, to work with the IASB in connecting ESG information to financial information, and the role of integrated reporting can play a part here, to set standards that support high-quality assurance, and to continue to work in collaboration with GRI, as well as jurisdiction-specific initiatives. So please respond. As Sue said, the final date for comments is July 29th. Next slide, please. So we think all of this is good for business. A harmonized global system that we have discussed today reduces complexity, confusion, and cost for companies. It's the best path to avoiding regulatory fragmentation. Businesses need a level playing field for attracting capital. And as more investors take sustainability matters into account in their own capital allocation decisions, companies who do not provide high-quality sustainability disclosures may find their cost of funds will increase. A harmonized global system for reporting helps accelerate sustainability. This is what it's all about. It will provide high-quality information to address the climate crisis. It will help companies and their stakeholders measure and assess progress towards sustainability objectives in a consistent, comparable, and decision-useful way. And through accurate measurement and reporting, it will promote more sustainable companies that create long-term value for investors and society. This is also helpful to management companies themselves. Again, it's not about compliance. So in conclusion, I'd like to just say thank you again to the leadership of this task force and II for supporting this B20 event. By supporting the ISSB initiative, the global business community can take an important first step towards high-quality sustainable disclosure. Now is the time to engage because the risk of regulatory fragmentation is still real. IFAC urges you to respond to the ISSB consultation, and we urge the B20 to recommend that the G20 nations explicitly support the use of ISSB standards. Thank you.